Your credit score is a 3-digit number that reflects your creditworthiness. It measures how likely you are to repay borrowed money. The most common credit scoring models are FICO, which stands for Fair Isaac Corporation, and Vantage Score. These typically range from 300 to 850. Your credit score impacts a bunch of areas in your financial life, including loan approvals and interest rates. Higher scores increase your chances of getting approved for loans, like mortgage, car, or personal loan. A strong score also helps you qualify for premium rewards cards that come with better perks and higher limits. Some employers and landlords actually check your credit score as part of their background screening process. Let's break down FICO scores a bit more. Payment history makes up 35% of your FICO score. Paying your bills on time really boosts your score. Even one missed payment can significantly lower it. Accounts sent to collections or defaulted, bankruptcies and foreclosures. Those have the most severe and long-lasting impact. Credit utilization is 30% of your score. If you use a high percentage of your available credit over 30%, that can hurt your score. Higher credit limits with lower balances are more favorable. Also, the balances on individual cards is what matters. The length of your credit history counts for 15%. Older accounts are better, so keeping long-standing accounts open can help. New credit and inquiries make up 10%. Applying for new credit can lower your score, at least temporarily, and opening several accounts in a short period is seen as risky. Credit mix is another 10%. A healthy mix of revolving credit like credit cards, car or mortgage loans is beneficial. Start early and use credit responsibly. When starting out, you might want to open a starter credit card. Consider a secured credit card or a student credit card. Another tip is to become an authorized user. Ask a trusted family member to add you as an authorized user on their account, so you can benefit from their positive history. Pay your bills on time every single time. Seriously, automate payments or set up reminders so you don't miss any due dates. Partial payments count too. If you can't pay in full, at least make the minimum payment. Keep your credit utilization low. Aim for under 330% utilization. Keep it below 10% for the best impact. For example, if your limit is $1,000, try to keep your balance below $300. You can also request credit limit increases, which can lower your utilization ratio without adding new accounts. Limit hard inquiries and avoid opening too many new accounts at once. Use pre-qualification tools, since a lot of lenders let you check your odds of approval without a hard pull. Maintain your old credit accounts, even if you've paid them off. Long credit history is good, so avoid closing old accounts if you can. Remember to monitor your credit report. If you spot something off, make sure to dispute those inaccuracies with the credit bureaus right away. Also, you can use free credit monitoring tools. There are a bunch of apps out there that offer free score tracking and fraud alerts, like Credit Karma, Experian, and CreditWise. Try to avoid co-signing loans if you can. When you co-sign, you share responsibility, so if the primary borrower misses payments, it can affect your score too. Bonus tip: protect your credit by freezing it. Once you've established your credit lines and you feel comfortable with where you're at, it's a good idea to freeze your credit. When you place a security freeze, creditors can't access your credit report. This means they won't be able to approve any new credit accounts in your name, whether it's fraudulent or legit. And if you ever need to let lenders or companies access your credit files to open new accounts, you'll need to lift your credit freeze temporarily. You can do this through the 3 major credit reporting agencies: Equifax, Experian, and TransUnion. A credit score is just a tool to give a quick and easy look at your ability to pay back loans. If you have a low score, it might feel overwhelming, but honestly, with a few changes, anyone can gradually improve their score over time. Just stick with a good plan, and that score will climb before you know it. If this video helped you, go ahead and like it, subscribe, and hit that bell so you don't miss out.